let's bring on board the management of ESAF Small Finance Bank, the company that listed on the bourses today. We have Mr. Gireesh C.P, who is the CFO of the company, as well as Mr. Paul Thomas, who is the MD and the CEO of the company. A very good morning to both of you gentlemen. Firstly, congratulations on listing on the bourses, and that too at a premium. Let me first ask a question about the AUM. That's seen a growth of a CAGR of around 32.22%. Do you think that you will be able to sustain this growth rate going ahead, even on a higher base? And also, what segments do you think will drive this growth going ahead?
Yeah, we believe that even at a higher base, we will be able to continue 25 to 30% growth in the coming days. Because we see a lot of opportunity in the areas where we operate and the products we are offering. Especially the growth on the asset side, the growth will continue to happen on the micro loan segment and agriculture, gold loan, and mobility and affordable housing. These are all the sectors we have already started growing, and that growth will continue. That's our hope.
Gentlemen, what about the deposit growth then? The deposit mobilization has been challenging for some time for some of the banks rather. Has that been a challenge for your bank as well?
Yeah, we have not faced a big challenge in deposit mobilization from the beginning. So we have grown, our deposits have grown year-on-year basis 28%. We have built over a period of time, we built a very good loyal deposit customers in the NR segment, non-resident Indian segment. Around currently our NR deposits are 24%, and also a senior citizen deposit base. So that comes around 30%. And overall our retail deposit is 90%. So there is no dependency on bulk assets. So we don't foresee any big challenge in mobilizing deposits for our business growth.
Also, if you could tell me what percentage of your book actually caters to unsecured lending, given that the caution on the kind of leverage is in the system. Are you a bit concerned about your asset quality by any chance?
See, I think the unsecured we are talking about it, and the unsecured book we are having is different, because our unsecured book is mainly for microfinance loans. Microfinance loans are being used for productive purposes. For example, 72% of our microfinance loans are used for agriculture and allied activities. So it is being used for income generating activities. So microfinance by philosophy, by concept itself is unsecured, because the people who don't have any collateral to give, that is why it is classified as unsecured. But over a period of time it was matured, and the default rates in the segment is very less than 2%, and we have been in that space for last 30 years. So but as a bank, after we launched the bank in 2017, we started diversifying our asset base. So when we started in 2017, it was 100% micro loans, but as of today it is 74% only. So year-on-year basis, 4 to 5% reduction is happening on the microfinance, but absolute value is growing. But since the other books are growing, the percentage is coming down. So our focus will continue there in the microfinance segment.
Also, if you could tell us what's the outlook on the spreads going ahead, given that the interest rate could actually persist for longer than expected at the current levels. Would the spread sustain, or is there some scope for improvement going ahead?
As far as the spreads are concerned, we were working around 10% even before COVID, which has a little bit affected during the COVID because of the interest reversal, etc. But we are come back to the 10% level of NIMs in FY23 itself. So going forward also, we are quite confident that we will be able to maintain the NIMs around 10%. As far as cost of deposit is concerned, last year my cost of deposit was 6.2%, which stands elevated by around 65 to 70 basis point as of now. and we expect that around 35-40 basis point still there is a scope for going it up on repricing my liability book entirely. But we will be able to maintain the NIMs at 10% levels. That is what we are.
Right. Gentlemen, despite lending to the bottom of the pyramid borrowers, why is the ROA at 1.63%? If you could tell us what sort of a target are you aiming for the ROA, and how do you expect to achieve it actually?
The ROA and ROE, even before COVID, it was ROA 2% plus and ROE 20% plus we were working. And we are almost reached at that level in FY23. And our target is to maintain those kind of ROA and ROE going forward.
All right, then we leave it there. Thank you so much, gentlemen, for joining us on ET Now. Also, once again, congratulations on that good listing that you've seen on the bourses today. That's the management of ESAF Small Finance Bank. But